Hello, everyone. Welcome to our last meeting of the year for the Wealth Building Plan Business Meeting. This is a time that I set aside to just talk about everything that is not tax related. I mean, we still get into some tax topics, but it kind of gives us a chance to let our hair down and have discussions about things that I normally don't have time to talk about because we're in the thick of tax season. So we have a lot to cover today. So let's start with, what did everybody do over the weekend? You can post in the chat or unmute yourself. What did you do? And then I'll tell you about what I did.
Graduation parties all over the place.
Yes, 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 yes.
I attended two, so yeah, I was busy.
Yeah, my daughter graduated from college, and the class of 2020 didn't have a high school graduation. Um so the whole thing, everybody's asking, "Oh, are you going to do something? Are you going to do something?" And I said no. Just the whole energy of planning events for people to come to, I just was not having it. So what we did was we invited those who were able to come out to Durham because she attended Duke, and we just had a dinner there. Because the whole thought of planning something in Maryland and the amount of people that I know, and then add in the factor of being Nigerian. I know you guys have seen how our parties go. I was not having it. And I'm glad that she was in agreement too. So we just did stuff at her school. We went to an Indian restaurant and called it a day. And so everybody that's asking me now, "Are you going to do something?" I'm like, "No, you can send her your gift. I'm not doing anything." So yeah.
Well, that was easy.
Yeah. All right. Anybody else? Let's see. Ricardo. Kids activities and time. Yep, that's the age now that you're in, dealing with kids activities. Birthday party for 4-year-old with a moon bounce. Okay, good, good, good. I'm glad that we are spending time with family. For me, I went to California, so I'm off in the summer. I'm off Fridays and Mondays. So we traveled Thursday evening to California. My cousin lost her husband, and they live in a city called Apple Valley, California, which is about 2 hours from Los Angeles. I was traveling with one of my friends who also knows my cousin, but she has a 10-year-old. And the question is, hey, where are we going to leave the 10-year-old? Because she lives in North Carolina. She's a doctor. And so when we looked at flights on United and Spirit, these flights were like cheap to go to California. It was like $150 to go to California. So we're like, it's cheaper flying these kids out with us to California than trying to figure out childcare arrangements. And then you're worried, is the person going to take care of the child well? So we just flew them to California, and then they went to Universal Studios there and then did like a tour of Hollywood. And then we went to Apple Valley, which was about a 3-hour flight. So we left Thursday night, 10:20 a.m., got there at 1 a.m., 5-hour trip, and then left Sunday at 8 a.m. and was back here by 5. So that's what my weekend looked like. Okay, Sharon looked at investment properties. Sharon, you want to tell us a little bit how that went? What did you see? Any that you're going to put an offer on, or how did that go?
Yeah. So there's a few. I'm gonna potentially do my first joint venture with a builder,
Okay.
and we looked at several properties. The one that I'm most interested in, I think it's overpriced, so I'm trying to work with the other realtor. I'm a realtor myself now, but I'm trying to work with the other realtor to find out if we can do some kind of creative financing deal with them. And this realtor, I think, doesn't know what creative financing is. So I have to educate her and see if there's a deal, because otherwise it's overpriced. Like, the market here is tough, in that a lot of the properties are overpriced.
Yeah. Yeah, thanks for sharing. That just reminded me, I have a staff, some of you even know her, Ashley, that used to work with me in our business development. So she reached out to me last week because her landlord wants to sell. And he wants to sell because he's trying to pay off debt. And she was asking, hey, can we do a blast to investors to see if anybody is interested in purchasing? The property is like a 3-bedroom, 2-bath in Clarksburg, Virginia, and he's selling for about 500. But where we got stuck was, I was like, okay, if somebody's going to pay $500,000, especially in this climate with the interest rate, what is their mortgage payment going to look like? Well, the mortgage payment is at $3,650 and her rent is only $2,750. I'm like, this is the reason why it's going to be difficult to find somebody who would want to buy this property and keep you as a tenant in there. It's either your rent has to significantly go up, or now they're having to eat almost what, $800 a month cost, in order to make this worth your while. And I said, can you talk to your landlord to see if he's open to having discussions about purchasing the property subject to the existing mortgage? Because that's the only way that I can see that this is a win-win for all 3 parties. And of course, the same thing, he doesn't know anything about it and he doesn't want to, he just wants to get out and all that. So I guess in this market now, we're having to educate people on creative financing and other ways, to get deals done. Let me bring you guys 2 additional updates. So I had a client email me last week. They have a condo and there was a water leak in his condo that ended up spilling over into another condo. And then the condo owner, is no longer cooperating with him because they want to be the one to hire like the remediation expert. They don't want him coming into the property and all of that. So now it's become a very hostile situation. His insurance can't do anything about it because it's not his condo, because the insurance that he has covers his condo. So of course I posted on a Facebook group to ask different people, hey, what can he do? Different people are like, he's supposed to have access. He's paying for it. But the bottom line was, now I told him to contact the insurance company to find out exactly what steps need to be done. So he just emailed me this morning, and the resolution is that the condo association is supposed to cover that type of damage because it happened in somebody else's property. And the master policy should cover that, even though because it's under the $10,000 deductible limit, they have to now pay for it and then come after him for that. So of course we looked at, what all that means in terms of his cost. It's going to be an expense on his rental property. But it's just amazing how much you need to be educated on what your rights are when it comes to dealing with other people and their properties and damage. Like, I even heard, like, if your neighbor's tree falls on your property, it is not the neighbor's responsibility, but your insurance that needs to cover it. So there's just little things out there in terms of insurance and what happens with properties. Does anybody have any other stories to tell when it comes to insurance and properties before we move on?
I have one.
Sure, go ahead.
It didn't happen in my unit, but in the location that I stay at in the HOA community, I guess I don't know what he was doing, but I guess he was drilling into the wall and hit a pipe. And I believe it was the upstairs unit, kind of along the same lines of what you were mentioning.
Mhm.
And it he hit a pipe some way, somehow. I don't know where he was drilling or what he was hanging up. Most likely, probably a TV, because that's the trendy thing to do right these days. And he hit a pipe and it flooded the whole downstairs. And now he's been going back and forth with the HOA as far as getting, who's covering what and, and stuff like that. So he's probably been dealing with that for a couple months now. But that's unfortunate for the person who's below him because they didn't do anything. They didn't try to hang the TV, but then they got water and stuff and damages and stuff like that all through their property. And sometimes the HOA is not cooperating, and insurance is probably they're not the most helpful. They'll drag it on as long as they can, and meanwhile you're probably living in the most not the best conditions if you the person who was impacted, like the bottom floor. So that's a little bit problematic for me. Sometimes when you're in these condos and these stacked condos, sometimes what the other person does is kind of a little frustrating, especially being in Virginia. Uh,
Yeah.
I've heard some things about this on the, I guess, the community board where, you know, weed is legal, right, or semi-legal. I don't know what it is. But it seeps through the vents and stuff like that because other people are smoking, or whatever it may be, or the person might be a renter and they might be smoking and it's seeping all through the whole building because it has such a strong smell. And that's just come different things that I've been hearing about it within my community, but it's unfortunate.
Yeah. And then just from a tax perspective, because that was one of the other things that we discussed, is just an expense that he would have to incur once the condo association comes after him for the portion that he has to pay. So that's, these things happen. Again, it's something that in your analysis of your rental property, you want to make sure that you properly account for unexpected expenses or, huge expenses, and just make sure that there's a reserve that is set up for things like this. And just making sure that you have adequate insurance. I was talking to another client today who has his rentals, his notes business. So he buys property and then sells it through notes. And then also he's a remodeler and contractor, and he doesn't have insurance on the remodel, contract, and business. So we also talked about how the rental properties are exposed and his personal assets are exposed, because even though the properties are in an LLC, the LLC can still be sued. So even if you have a property in an LLC, you still want to make sure that you have adequate insurance covering all lines of businesses. And that if you do have significant equity in your properties, that you set up a finance LLC to at least record a lien or to spin off the other businesses that are in that same LLC in order to mitigate your risk. All right. The last thing that I wanted to talk about in terms of news. So I had a client contact me today. No, not today, last week, because she wants to refinance her properties, and now the lenders are not agreeing to refinance because they said she has a lot of deductions and losses on the properties that they're not able to refinance. Well, when you guys come to me, you want me to claim as much deductions as possible because you want to reduce your liability. But sometimes the whole goal of wanting to dealing with financing and dealing with tax reduction sometimes don't go together. You have to decide every given year which one is priority. If you want to qualify for loans, some of these expenses are going to have to be amortized or depreciated and claimed at later dates. If you want to be aggressive with accelerating depreciation and expenses, it will bring down your liability, bring down your AGI, but that ends up impacting you on the loan side. So what I did was, she's in California, so I did send her to Corey. I wasn't sure whether or not Corey had a license in California, but I asked him to kind of talk to her a little bit to see if there's anything that he's able to do. Corey, do you want to share with us a little bit what happened with that?
1 second. Wait, where's my video? Okay. Hello, everyone. Yes, thank you. Unfortunately, I have not heard from the client yet. So,
Oh, okay, yeah.
but I can reflect on that. What I would recommend, when it's getting like in January, if you are in that situation where you're concerned about how it may affect your income, one of the things that I can always provide, sometimes if you're at a bigger bank, you may not have an individual you deal with, but with most of my clients who are my investor relationships, I talk to them probably on a weekly basis throughout the entire year because they're ongoing purchasing properties. So we have more of a working ongoing relationship month to month, week to week. And I always recommend, let me take a look at the tax return draft so I can give you more of a lender perspective, because when you're talking to a beer about the deductions, it might be good to just have like a lender approval perspective as well as a tax deduction perspective. So you can really just see both sides of it depending on what your real estate financing goals are.
Yeah, and I think the main thing too was just I was happy when you responded and said that you have a license in California,
Yes.
because I'm like, oh, maybe
Yeah.
he's just in Maryland. So hopefully you guys can talk and see what you're able to walk out. I also have Glory. Glory is on the line. I also wanted to talk to her, and we're going to come back and also get your opinion on this, because I actually asked Glory to come on today because her real estate strategy is she's a rehabber, so she buys, rehabs, and sells. So thank you, Glory, for joining us. She's in the wealth building program, doing very well, very well. But one of the things that I discussed with her is like some of the challenges of having to do multiple deals at a time. And then the whole financing, and then she's saying she has to finance for cash. And then we're looking at what's the tax impact of that versus if she's able to get like hard money loans or private lenders, so she's able to do multiple properties at a time. So Gloria, can you unmute yourself and share with us a little bit about your business structure and the financing challenges that you're having so we can discuss that?
Oh, okay. Thank you, Abiru, for giving me the opportunity to talk about my business, to share what I'm doing. My name is Glory Fonta, and I do flips mainly in PG County area. I stay in PG County and I do business there. So mostly I do single family homes. That is all that I've actually done. When other deals come, usually I'm busy or I've chosen not to be doing those.
How are you getting these deals? Like how do you even know about these deals?
These deals, predominantly, I get my deals from the MLS. That is my to-go. When I'm looking for a deal, that is where I'm looking for. But there are times that wholesalers send me deals too, because I belong to, a lot of different wholesalers, their mailing lists. I see how they send deals every day. So when I'm looking for and a good deal come, I get them. And I also try to be at their VIP list. So they'll call me sometimes and give me deals without putting it out there for the fight. So that's how I get deals.
Okay. And tell me a little bit, because I know when we were talking, I think you had like 3 or 4 properties, and I think you said, oh, you wanted to do it for cash. And I'm like, why are you doing it for cash? You were talking about the financing challenge that you were having. Can you tell us a little bit about that?
Yeah, predominantly I use the hard money lenders loans, and they are very expensive, given the fact that the market, the houses are already expensive, our profit is low. And then when the money is that expensive, it's like you're working for the hard money lender. So I wanted to try to do some cash, to buy some and fix cash. But it's very limiting because they're expensive. By the time you buy a house cash for $250, put another 100 to fix is very high. But the gain there is that you will not be paying the monthly mortgages, and you will not go to that, because the hard money lender also have the, apart from the interest, they have the points,
Points.
origination fee, all kind of junk fee, we call them junk fees. So I was looking at it seriously, and I'm thinking that if a group of contractors, group of people could put some money together and finance some of these deals, and rather than their money sitting in the banks, that will be better. So those are the challenges I have to do more, is to keep giving a lot of my profit to the hard money lenders. I'm not complaining, but I'm just looking for other ways.
Yeah. Okay. So, Corey, I know you're a hard money lender. So what would be your response to, and then I want to hear from other
Hi.
investors too. Is it better to do all cash, or is it better to keep dealing with the hard money lenders, or to try to set up a private investor arrangement?
Well, a few things. So first of all, thanks for the introduction. I'm a little different than most most hard money lenders are kind of like just in this circle of being just a hard money lender. So I also am a regular residential lender as well, but I have access to hard money in addition. So I can look at it a little bit different, because I can look at other properties that you may have that you just want to pull cash out at a regular lower interest rate, not like short-term hard money, and you can tap into some of that equity that you may have in other properties. Okay, so that's one thing that I can do, where I can do like long-term permanent financing as well as the hard money. Okay, so that's one of the big differences. But to get into the hard money discussion, one of the things that I think is really important is working with a hard money lender that gives you maximum leverage. Okay, the concept of leverage is very important, because leverage is the idea of how little money out of pocket can I put to this project to flip it and make a return, right? And I have the ability with people who have, typically you do have to have about five deals to get to the leverage that I'm going to speak to now. But I can typically go to close to 90% leverage. Okay. What that means is that you're only coming out of pocket with about 10% of the acquisition. So yes, I understand fees, all that. Also, we keep our fees typically around 2%. Okay, our points. Okay, there's typically some underwriting and processing fees, but typically 2 points. Okay, and one of those points we can typically defer to when you pay off the loan. So again, back to the idea of leverage, if you're only paying 1% up front, and you're going to like a 90% loan to value, there's a lot of flexibility that you have there to get in and out of a transaction and be able to do multiple deals, but putting most of that financing on the bank side and not out of your pocket. So that's one of the things that we're very popular, and I've really built quite a bit of business, a lot of referrals recently from a beer, that we're able to, people love that idea of, you know, $500,000 acquisition, you're only coming out of pocket with 50,000, you know, that's big, right? I will say this though, with any hard money loan, the terms are going to be better if the property has a good ARV. If you're trying to make a deal work like over 80%, you can try to do it, but that's kind of almost a red flag that maybe you should look at different markets or just a different way to find a property, because if there's not enough equity in it, like that's a red flag in itself.
Okay, but are you able to rent to give money up to the 80%, or are you at 65% of LTV, or what percentage of the
Okay, so you're saying, go ahead, I'm sorry.
what percentage of the after repair value can you lend? For
Oh,
example,
well,
some people are 70%, some 65,
right.
some 80.
Yeah, I mean, typically, like I said, from a leverage typically it's usually about a 10% is going to be about what is going to be your cash out of pocket. Okay. But if you're saying like what percentage are you usually looking for, I would say under 80.
Okay.
You know, we can still go higher, but then you're bringing more money out of pocket.
All right.
So then it starts to kind of defeat the purpose of the whole idea of financing it to begin with. But we can look at it on a case-to-case basis. I know if you're holding, then you might be willing to do a little bit less, you're a little higher loan to value. I know the equity may not be as important if it's a good, you know, if you know that's going to be a good rental cash flow. I understand that philosophy. What I'm referring to, Abir, is that I found that some, and Gloria, you can probably agree with this, is that if your strategy, let's say, is like a STR, short-term rental, you might be willing to pick it up for closer to market value if you know that the rent is going to be a good cash flow, right? But if you're looking to flip, you certainly don't want to get into a deal that doesn't have equity, or you're going to end up
Losing.
maybe not any money at all, right? So some of that depends. Like if it's just building a good rental portfolio, maybe you don't have to go as high. And we also do a lot of purchases for people with properties that they don't need a lot of renovation. Maybe they're not at market condition, but as long as they're not like anything that an appraiser would say is a safety issue, let's say they at least pass like a Section 8 requirement, we can do that as a conventional loan. A lot of people don't realize you can do conventional Fannie Mae and Freddie Mac investment purchase it has to close in your own name.
Okay.
But then you can switch it to an LLC. And the rates on that usually are in kind of the low to mid sevens with 1 point typically, which is closer to conventional primary, right? So that's another thing. A lot of investors don't realize you can do that type of financing with conventional loans. The only thing I will say, and this is a thing we could even do for a whole nother day, you do have to be careful about dissolving an LLC in certain in certain states. And when I say that, sometimes people will dissolve an LLC to get conventional financing. Okay. But in DC, if you dissolve an LLC and then you want to put it back into an LLC, you pay full transfers.
Taxes. Yeah. And some counties in Maryland, I think Prince George's is like that.
You have to check.
Baltimore City, yeah, each in Maryland, it depends on the county,
right.
that you're dealing with. Yeah,
and then Pennsylvania, the issue is that it can take you almost 3 months to dissolve an LLC because they have to go through this. It's this bureaucratic review that can go on for 3 months to make sure you don't owe any taxes. So it's just a headache. And I learned that from a client where we're trying to do a conventional investment loan. And if we knew it was going to take that loan, because we can also do a full doc or a permanent loan in an LLC. We can do that as well, but it wouldn't be conventional financing. But sometimes you have to keep it in the LLC because it would be it would be a big tax transfer issue if you dissolve it. So you got to be careful with that.
All right,
Okay.
so thank you guys. So
Sure.
what I'll say now is, ladies and gentlemen of the jury, now that you've heard Corey and you've heard Glory, the question at hand really is, should Glory consider switching to all cash financing, or should she continue to do hard money lending, even with understanding how high the interest is? If you were in her shoes, what would you do?
It's so funny.
Any takers? Do you guys have any opinion either way in terms of whether she should continue to do all cash or continue with the hard money lending?
Well, this is a great question. I'm so glad it's being brought up because I'm also sort of thinking through some of these issues myself and was reading through Bigger Pockets. I think like, so it seems like if you have, the thing I struggle with is like, I did a fix and flip, or I did something using my cash, but then I ran through all my cash, and that was, that was felt extremely uncomfortable, and so then I was thinking about like financing. Yes, financing is expensive versus doing like a capital raise and having partners. And one thing that I read that was kind of interesting about that was analyzing the deal, like if you go with having partners who are giving you capital, they're investors, you have to look at what is the cost of their returns versus the cost of financing. So for example, if you're giving an equity partner 50% of the proceeds for the cash they put in, is that costing you more than going with an expensive private money loan? So that's kind of what I'm trying to think through right now. I don't have a definitive answer. I think it's probably depends on how you structure your partnership.
On that is to give 50% of your profit for your cash partner is definitely not to your advantage, because you're going to do all the work and then somebody give money and take 50% of it. It's just too much. It's cheaper to go with the hard money and then give 50% of your profit.
Right. But this is a question for you, Gloria, is, if you've done partnerships before where you're just using your partner's money, what do you typically offer them as their equity?
I have really not done partnership before. I wanted to do it, and then I did not, based pretty much on that fact that the partner who wanted to partner with me wanted to give the money and take 50%. I thought that was not fair based on the amount of work that I'll be doing. That would be just too much for him to want back. So I did not get into that. I resorted into hard money loans.
I think one thing I want to bring up too is that when it comes to partners, the risk side, because a lot of the hard money loans, it depends. In some cases, some of them can be non-recourse. When you're dealing with people that and if something goes south, that's really a reputational risk too, right? So that can be really devastating, and then it becomes personal in your social community and all of that, right? So it's I'm not saying that, partners isn't a good way to go. And sometimes I have partners that also add financing to the partnership because properties are so expensive nowadays. You sometimes need a partner and financing. Okay. So, but those are things to think about is, what is the downside to me, sometimes it's that personal, social, reputational risk that's more concerning to me than even the financial risk. Anyway.
Yeah, and for me, what I agree with the whole reputation issue, because this was one thing that happened to me when I first started, was I was so excited about real estate and I wanted everybody to join me. And you know, your first couple of deals, you make a mistake, and you know, people are not as forgiving because that, you know, that's their life savings, and you have to understand what is involved. My approach that I used a little differently after, you know, I got hurt trying to bring in partners was the next set of deals that I did it with people that I knew were involved in real estate and already know how the real estate game works. So I partner with people like Joseph Samoa, like clients that I know are doing very well. They're doing the deals. I'll go out and try to raise the money, but then I know that it's being invested with somebody who I know that it's reputable. And we didn't do profit sharing. It was interest, you know, so it was offered as an interest, not profit sharing, because profit sharing, they're sharing in the profit, but they're also sharing in the risk. Whereas if it's a loan, no matter what, you have to pay them back. And I found out that that works better than trying to do the equity. Equity sharing, you know, the profit sharing is really equity. So it's like equity versus debt. And then also sometimes if you try to get people involved in equity, it also means they have a say. And if the person doesn't have any experience in real estate, now they want to say what's happening because they gave you money, but they don't have the expertise, you know, on how to take the deal to the end. So for me, I would analyze how much money am I making from, you know, because even though it looks like, oh, I want to keep more of my money, 100% of zero is zero. So if you don't even have the deal in the first place, you're not, so it's better to pay the hard money lender, whatever, and still make something in the deal than nothing at all. But if you can also start developing a list of private, because there's a lot of people out there who want to be involved in real estate, but can't, they don't have the time, they don't have the expertise, you know, but they have the money and are willing to partner with somebody, you know, and make interest rate more than what the bank is paying now. And by the way, speaking of interest rate, I was, you know, looking at the whole financial planning, and a financial planner just gave me a really nice formula. Hey, if you want to make $50,000 a year, you just need to have $1 million in the bank at 5%. So kind of like knowing how to make presentations to people so that they know, hey, you know, which bank is going to pay you 3% or 4% on the money that you have versus me giving you 8%. And the rule of 72 at 8% means that this money could double in 9 years. And working with me puts you on a better path to financial freedom in terms of building passive assets than keeping it with the bank. Because keeping it with the bank and making only 2-3%, they're turning around and lending it to people at a higher rate. So why not do it within your community? But I'm also very careful on who to partner with. Not all money is good money. So just making sure. But, you know, I think doing both, I'm not going to say, oh, completely shut down and do all cash. Or maybe you just do a mix. Maybe on some deals you do cash. On some deals, maybe you do hard money lender. Some deals you do private lending. And just with that mixture, everything overall at the end of the year, you're looking at a total picture rather than just looking at just one, you know, deal. Any other suggestions before we move on? Any other thoughts? Okay, in terms of taxes, I just have one issue that came up today I wanted to discuss. So somebody, I don't know where they heard this from, they had a C Corp and had C Corp losses. So you guys know that C Corps, the income is not passed through. So whatever income or losses that the corporation has stays in that entity. It doesn't pass through to you as the owner. It doesn't pass through to you as the shareholder or as the partner. But this person went and set up an S Corp. So S Corp is not an entity. It is an election that you make with the IRS. So it can be a C Corp or it can be an LLC that files an election to be an S Corp. But this person had $80,000 loss in the C Corp, and they went and did an S Corp election and got approved. So all of a sudden, they don't have these losses that they had in the C Corp, they're not able to use it anymore because it stays in the C Corp, is going to be trapped as lost. They can't go back again. This is why it's very important that even if you hear something, I'm sorry, on TikTok, or like Corey said, you know, you're getting ready to do financing, make sure that you're talking to me, like send us an email to say, hey, I'm thinking of doing this. Does it make sense? Because now she has this $80,000 loss that is gone. So now the issue is, should she go back and revoke? My question is, why did you even do the S Corp election in the first place? Not that it was a mistake, but it can't be a mistake. I mean, if you filled out you had to have heard something somewhere that made you believe it was okay without necessarily doing an analysis. So it's important to make sure that you're talking with your accountant, talking to others, you know, professionals, financial planners, you know, lenders, all that, to make sure that you have your team in place that can advise you on things, you know, as you go along. That's very, very critical. The last thing that I wanted us to cover for our business meeting for this year is really like our services. And I'm looking to slow down. My goal is that in the next 5 years, I'm going to start slowing down. Don't worry, I'm not going to leave you hanging. We have a good team here where even if I'm not working, we have you on a team where you have people helping you with your taxes, entity structuring questions, annual report filing, and all that. But I wanted to ask you, if we had to offer other services, what other services would you be interested in as an investor? What else would you like to see from us? Don't overwhelm me now. Don't make me be like, what? I can't do. But, you know, if you have anything, what services would you like to see?
I will go back to money. I would like that you guys could possibly create a little forum for, not forum, whatever, group of people who have money sitting in the bank, get them educated and get them to be lending this money to people who, let me say to people like me, not saying that it's me, but people like me who are using, who are buying money expensive, so that at the end of it, it will be a win-win situation, because the people who have the money in the bank, a lot of them just don't have the education. So if you create that little committee, get the people inside, talk to them, and a lot of people a lot of people here flip houses. A lot of people here will have a need for that. And then together we all win, win, win.
Okay, so like setting up like a private lending group.
Yes.
Where you guys can now, okay. I actually had a client that reached out to me and says that she wants to get back into real estate and was asking me how. So I can say, hey, are you willing to run? Because usually the thing is, I'm not looking for any more work.
I know, right?
But I do have the network out there because, you know, I'm getting into financial freedom. The kid is 17. He'll be graduating in 4 years. My daughter has graduated. My son is in college, not going into second year. I have been developing passive assets. I want to be able to be truly financially free to do other things, get more into doing ministry, Christian missions. By the way, I'm going to Ivory Coast next month, to talk about entrepreneurship to young adults. So if any of you is interested in sponsoring me and making a donation, let me know. We have a foundation. We're going to be sending out information about that. But I want to be able to do more of those things, where financial education and all that. So I'm not looking for something that would add more to my plate, but if I have somebody that would run with it, I'm more than happy to do that. So what I'll do is I'll talk to my client and see whether or not this is something that she's interested in putting together, because it would just be a matter of sending out a blast, and then those that respond, look at how much money they have. Maybe we have like an entry fee. And then now those who are looking for money we can say, hey, you can go to Corey for the traditional way, or if you want private lending, we can shop these deals to this group and then see if anybody, is interested in lending to it. So I'll look into that and then let you know. I know somebody talked about discussing cryptos last week. Anything else?
I'm very interested in this idea that Glory suggested and you spoke about creating more of a network of your clients who are, because it seems like there's a lot of us who are doing are experienced on the real estate side and fix and flips or buying holds or whatever. And, matching that with money is good. And also, the real estate agents, like as a real estate agent, focusing on helping investors, being a part of that group. I was also thinking, I love this idea of doing the financial like investing education for perhaps people who don't usually have access to that information or aren't looking at it or aren't thinking about it. I was thinking about it'd be interesting to do it up here in Kingston, New York, where there's a lot of opportunities to take distressed housing and convert it into habitable homes. And there's also housing shortage up here. There's a crisis. So would be interesting to have a forum around that and perhaps make some deals happen as a result of connecting people.
Okay, noted. So New York, Maryland. All right, anybody else? Yeah, want me to start calling y'all Brendan, Jeffrey, Nicole, Sharon J, Ricardo. Do you guys have any other services or something that you would like to see us assist you with in the area of your finances or wealth building?
I did have one.
Okay.
I did have a question about this is more specific to me, but I had mentioned it to you last week. The question was like what stuff you want to see cover in the wealth building program, right?
No, what additional services that you think we can offer that would be of value to you? Well, it's kind of the same thing. Yeah. So go ahead. Yeah.
Yeah, so my current situation is that I recently I'm starting a new role. So I'm transferring over from the private sector to the government sector. So I've been kind of like Googling it and YouTubing it for the past couple weeks or days per se. So I have a 401k, right? But a 401k is for the private sector, and now the government has TSP.
Mm-hmm.
So just some more education on that stuff. So, the difference and, um, yeah, stuff like that, will be very helpful because that's where I was gonna reach out to you to kind of figure out like how does this, how should I proceed with this? Like, and I kind of think I came to the conclusion. I think I was looking on the website and it said that as long as the combination of the two for tax advantage purposes, it can't go over that. You can't contribute over, I think it's 23,000 between the two of them. So I already have my 401k, which has been taking money out of my paycheck, but I didn't start my government role until like 6 weeks later. So I thought that I had to start over and it'll be a whole 23,000 that needs to be contributed, but I don't think that's the case. So that was one question I was going to pose to you eventually. Well, once I kind of figure out what the TSP is about and stuff like that, because it's definitely fairly new to me.
Okay, so TSP and 401k are really one and the same thing in terms of their retirement accounts. You can roll over your 401k into the TSP, same thing, the TSP into the 401k. But it functions the same way in terms of how much you can contribute and what you're able to do with it. The 401k that you had previously, like some of these conversations that we're having, you can set up a solo 401k for the business or a self-directed IRA and roll over that 401k into those accounts to be able to use it for investing like real estate, lending, notes, those kind of things. So you'd want to set it up in a self-directed account. But if you just want to do like the regular stocks or whatever, most people usually would leave the money in there where it was. I don't suggest that. I say this is a good time to kind of review the money that you have in a prior job retirement account and then try to roll it over into another account that would give you a better return on investment. So that 401k that you had before, definitely look at setting up a solo 401k. If you haven't already scheduled your business meeting, please make sure that that is scheduled. And we'll talk about setting up a 401k for the business and then rolling over the 401k that you had previously into that. And then for the TSP, it functions the same way. It's kind of like looking, having a financial planning discussion in terms of where you are now, your age, risk tolerance, and all that. And then picking, asset classes that would be able to give you a much better return on investment. But kind of look at it as one and the same thing. TSP is for the government, 401k is for everybody, but it kind of functions the same way. There's other accounts like the 457 and stuff that where you can contribute in addition to what you already do in the TSP, but that's not where we are now. Right now, the 401k and TSP are kind of one and the same thing. There's no huge difference. And then also knowing that while you're at the job, you're not able to roll over any funds. You can only roll over funds after you've left the job.
Got it. I think I did talk to one of your colleagues in reference to open up a 401k for my business, but I think we came to the conclusion that it wasn't best. It was, I think it was a SEP IRA that we were looking at.
Yeah, so it may not have, I think I remember that. So now we need to revisit it because it may not make sense for you to open it up for the purposes of contributing. Because if you don't have a huge earned income from the business, and let's say you only have rental income, you're not able to contribute. However, you could still open it up for the purposes of rolling over funds that could be available, like this discussion we're having about private lending. So you still will now be able to open up the solo K account, not for the purposes of contributing that would reduce your tax liability, but to be able to roll over into roll over existing retirement funds to be able to invest.
Yes, that was it. Exactly. You hit the nail right on the head. I don't think I have enough income in the business. I have the business, but between paying the mortgage and some other, maintenance stuff, I had renters and they didn't really take good care of it. So it was always something broken and, regular maintenance, that I try to keep that account kind of, flush and keep it heavy just in case these things for these incidental. I don't think I had enough to like where I'm be able to pay myself maybe $1,000 per every week. No, I'll probably make $50 or something like that when it's all said and done, because I had to keep the account, above water. So that way, if something does come up, like for example, I'm doing a renovation right now, I want to keep money in that account instead of having to pull money from other different places. So, just little things like that.
Yeah, so let's definitely have a conversation about setting up the 401k for the purposes of rolling over funds and kind of like self-directing and being your own bank, not for the purposes of contributions. So now we have a different reason to set up the solo 401k. All right, anybody else? Any other services you'd like to see, something you would like us to discuss? Okay, well, so we finished on time today. Thank you guys for participating in our annual business meeting for 2024. All 4 meetings were recorded, and we are going to upload them to YouTube and make the link available. Please feel free to go back and refresh, you know, your memory, listen to them, reach out to us. I look forward to serving you. If anything comes to mind throughout the year, again, we're, you know, don't wait until tax time to talk to us. As stuff happens throughout the year in your financial life, feel free to reach out to us. Let's talk about it, strategize about it together. And happy investing, happy wealth building, happy retirement, happy everything that has to do with finances. Take care, guys. Bye-bye. And thank you, Corey, for coming on.
Thanks, everyone.
Thank you. Have a good